Hello, traders. It's 8:01 a.m. Chicago time, 9:01 Eastern on the 10th of September, 2018. It's a Monday, brand new week. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk is slightly on. We're trading. The S&P is actually trading higher at 28.85.75 above Friday's high. Friday closed around 28.75. Across the board, we're seeing equity indices leading. Euro Stoxx 50 leading the pack this morning, up 29 points or 0.88%. The British pound is strong. There's talk that the EU 27 are meeting in Salzburg to push through some sort of a Brexit deal. And so it's looking like something might be worked out. So there's pressure from emerging markets. The Indian government is intervening verbally on the rupee weakness. China is taking steps to make sure that it does not end up with a black swan event on its currency. There's the trade issue still on the table. There's just a lot. Sweden had its elections, and the results were deadlocked, and so on. This week has quite a bit coming through. We're coming into the third week of the month. Tons of releases. Overnight last night, we got a lot of numbers out of the UK. China CPI. Today we're going to get U.S. consumer credit at 3 p.m. Eastern. Nothing too significant there. Fed speaker Bostic at 12 Central. And then for the rest of the week, we pretty much have on each day we pretty much have an important release of some kind. Tomorrow, German ZOO ILO, and weekly earnings in the UK, and so on and so forth. So, expecting a lot of interruptions this week in the auction. Let's take a look at what was expected on Friday pre-market. This is the main plan for Friday. Scenario 1 was looking for an early test below the prior low. The prior low is right there. An early test below the prior low for a rally that then consolidates at the point of control. This is the point of control. This line right here, that's the point of control by definition. Is the mode, the statistical mode of the day, or the price that has the highest number of occurrences or the highest volume. And then the expectation is it would push to 28.85. Okay. In fact, I turned on the captions in this video, and I said I was looking for around 16 to 24 points. But somewhere in here, I mentioned the 28.85. There it is. Control, and then a likely test higher into 28.85 and then consolidate. So the plan for scenario 1 was dead on. This is by all means a fluke in a way. It's not to say that it's possible to know exactly where the market is going to turn ahead of time, 2-3 hours ahead of time. What it's going to do, but the really important point here is that following normal auction principles, you can create a plan and an expectation. That's really what the Trader Bite's about. And so as we go through here, I talked about Mike Tyson, I guess. As we go through here, let's have a look at what we did on Friday. Here's the trigger chart on Friday. It's kind of squished. Let's switch to 4. No, not 6. Oh, man. This is going to take a while. All right, 4. Let's go to a 4-tick Renko just to fit everything a little bit better on the screen. So we open right on the edge here at 28.67. We open just out of range, 2 ticks out of range, 28.67.50. We test up, we test down, we test up, and we test down, and then we break the opening swing high. So the opening swing is very clear, open auction out of range. Actually not in range, just out of range. Pulls back to the opening swing high and pushes into the prior day's point of control as mentioned. Okay, we have a small rotation. I think it was only about 3 points or something, and then it pushes through. The stock zones you see here are for today. They're updated already, so they're not really conforming with what was there on the Trader Bite on Friday. But ultimately, we end up pushing to 28.85, and then we go into this strong strong impulse down. As we push lower, the expectation is for it to have a continuation below. We consolidate for a while. We have our continuation below, and then we just sit sideways, and we end up with a point of control that is pretty much in line with Friday. So Friday's point of control, Thursday's point of control is right there. Friday's point of control is right there. Right on top of each other. One-time framing down continues. The sellers are still in control of the daily auction, the daily trend. Let me switch this back so I don't forget. As we come into the open, the sellers are definitely in control. As we look at the bigger picture, just hop out to a 15-minute. Since the 29th, we've basically been making lower highs, lower highs, lower highs. In fact, the best way to see this is through the composite. There it is. So we're holding this channel somewhat. Probably can adjust this lower line a little bit, but so we're holding this channel where we're just lower high, lower high, lower high, lower high. Expect it to break here. I expected it to break on this day here. It wasn't able to do it. Lower high, lower high. I'm not so interested in the lower low, but the lower high tells me a lot. Okay. If we have an inside day and we start to break, then that day could turn into, so let's say, well, we're breaking today. It looks like we're having our we're ending the one-time framing up this morning. But let's say we get a day where it just consolidates in here, completely balanced day. So lower high, higher low, okay, and then the next day it starts to break that high. That is a trend day. That is likely to be a trend day. That is a day where you want to get long and hold as best as you can. Wide stop and then add to the position on a pullback to ride the trend once it's struggled a little bit. Those are ideal. That's pretty much the only time I can hop on a trend. Otherwise, I'm basically trading back and forth, back and forth, back and forth. In an outside in type of fashion, or if I'm trading a trend, I have to wait for a pullback and always trade the counter rotation against the trend. So that's how things are shaping up in the overnight. Friday, by the way, Friday had really good volume again. We've been hitting about 1.3 to 1.35 million contracts every day. That's a stark contrast to about 700,000 over the summer, over much of the month of August. Volume is back, and the market is really doing a good job facilitating discovery of prices. So these are somewhat ideal conditions to not only find opportunities, because there are a lot of rotations. As you saw, I had to shrink my 2-tick Renko chart to 4 ticks to fit it all on one page or one screen, it's just an indication that there are a lot of rotations there. So on those occasions, a lot of people get scared of volatility, and that's understandable. Volatility increases our risk, but it also increases our opportunities. But it also provides redemption, right? So you take a trade and it just smacks you. You get a full stop, no scale outs. It's important to stay in the game and look for the next opportunity and include that new information, that stop out in your next trade to help you with your context. So I like these kinds of markets because even when I'm wrong, I can do something to fix it, as opposed to a dead market where you might get run over and it just consolidates into a 3-point range and there's nothing there. The overnight session really is very bullish from the open. We have the point of control near highs. We have a weak high. We have a market that is not backing off. We have quite a distance to the mid, and the inventory is almost 100%. It's probably 99% long coming into the session. So knowing that deltas also with this market is also positive with this market. So overall, we're seeing, as I said, risk on and a strong push by buyers this morning. So we're likely to continue to squeeze higher into this session. Let me kill these levels. So as we push forward, point of control doesn't move. As we push forward, looking at today's plan, we're looking at 28.8650 currently. We're likely to open right against the 28.85. I'm not expecting a gap on the open. Open auction, just slightly out of range or just slightly in range. I'm looking for a small pullback down. This is an opportunity for sellers to defend their position. Looking for a small pullback. I'm looking for an impulse up, and then it's likely to really push through today. So as soon as you see an impulse up today, you'll want to avoid getting short if the impulse up comes in. So it's not as simple as saying we're opening higher than the prior day, don't get short. Because what could happen is you could end up opening higher, pushing up, getting an impulse down, and then we would find ourselves down at 28.74, even at the point of control, which is scenario 2. So it's not that simple. You really have to wait, in my opinion, for what the market wants, for the market to declare what it wants to do. Secondary scenario, an open auction that pushes higher, that grinds higher, impulses down, pulls back, balances out at 77.50, comes down to the point of control, the stock zone, consolidates in this area for a value low. Remember, Friday's profile is balanced and the value area is valid for the whole range. So it could push as low as value low at 28.69 and a quarter or so, and then hold steady into the prior day's range. So we do get the higher high, but it might continue to drift down and balance before it can really take off to the upside. Okay. So those are the two key scenarios. Scenario 3 is a quick push down and an impulse up that turns into a trend day and just blows out the shorts. It's a short covering day. Could get 19, 20 points of range in that environment. But that ends our, if that occurs, it ends our flagging formation that I talked about in the composite. Remember, the composite had done this. It had gapped up and has pushed to all-time highs on May 29th and has been drifting down, 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 down. And so what this is a sort of a bull flag that once it breaks, then we're looking at that high again. And that's really what scenario 1 initiates. I don't know if he'll do that for the rest of the week because I'm not an analyst. I'm just taking it day by day. but that's what's likely to take place. The overall big picture trend, the intermediate and long-term trend, we just put in all-time highs. So the intermediate and long-term trends are bullish. So once it starts to turn up, yes, the day trend is down, but once it turns up, the bigger picture kicks in, and that starts the higher time frames acting at these what would be considered discounted prices at this point. Okay, I hope that helps you out. Just make sure you're coming into the week with a plan. Make sure you're not just winging it every day. Show up and just click away and trade emotionally or trade from your gut. Have some sort of a plan. Wait for the market to come to you. Okay, if you don't understand what that means, just ask on Twitter or in the Convergent chat room or whatever. Good luck today. I'll catch you tomorrow. Take care.